Ball Corporation is a worldwide metal packaging company that serves commercial and government customers in the packaging markets and the aerospace business. Ball Corp's positioning strategy is Drive for 10, which focuses on three things: who they are in the present, where they're going in the future, and what is important, such as innovation and sustainability. 2015 was a success for Ball Corp because they were able to maintain a competitive operating environment, focus on controlling what they can, and position the company for future success. Ball Corp expanded across the globe, focused on customer needs, and leveraged their knowledge. In 2015, they increased their assets, outperformed other stocks in their sector, and invested in growth capital projects. Results from hard work in 2015 are expected to appear in 2016 as they continue to move forward with the Drive for 10 mindset.
Looking at Ball's corporate filings, we also see solid signs of good financial performance for the next 3 to 5 years. We can expect higher margins through synergies and cost savings, higher earnings through sales growth in all business units, and lower input prices due to lower commodity prices and increased recycling. Free cash flow will continue to grow due to nearly $300 million in annual synergies from the Rexam merger. The threat of substitutes like plastics becoming viable in the next 3 to 5 years is low. Metals are infinitely recyclable, more resistant to high temperatures and pressures, and currently hold the dominant position in alcohol and soda markets.
For the future development, Ball is constructing new facility in Mexico and processing acquisitions with Slater Ball Beverage and Rexam plc, which result in greater revenue and help Ball expand into new international markets.
We think you should invest in Ball Corp. Why? First, let's talk about the pros and cons of stocks versus GICs. With stocks, you have a chance of much greater returns, however, with a greater risk, and you can get paid dividends. Whereas with a GIC, assuming a 1.5 return, the return is relatively low, but guaranteed, and GICs are not easily liquidated. With the recent activity from Ball Corp, such as the recent acquisitions and new constructions, we feel that the risk in their stock is quite low, while the chance of returns greater than 1.5% is relatively high. Lastly, Ball stock has risen by 130% in the past 5 years, and by 12% in the past year.
Ball Corp is clearly the better investment option over investing in a GIC. Investing $10,000 in Ball 3 years ago yielded returns of over $5,000, whereas investing the same amount in a GIC would have only resulted in returns of around $500. Ball investors will likely continue to make more and more returns in the long run through their growth, innovation, and acquisition of their competitors. Buying stock in a GIC would never yield more than 1.5% in returns for their investors. This makes Ball the clear winner.
Created using Powtoon.